Hey, what's going on, everyone? Thank you so much for watching the video. In today's video, since I haven't really been around posting in quite some time, we're going to go ahead and talk about what we've missed. All right, so let's get right into it. All right, first things first. On August 17th, I said that I would be buying 225 IWM calls, but I was buying in very light because, I think that the IWM was going to still fall to 212 to 213 soon, at which point I would buy in heavier. All right, so August 17th, I said that I was buying in very light, and I was waiting for 212 to 213 to buy in heavier. Why? So here's August 12th. I bought in right around here. And at this point, if you've been watching my videos, you would know that the IWM was trading outside of the lower level of the Bollinger Band. All right, so I automatically just bought in a very light, small position, but I realized that the momentum was still heavily favored to the downside. And I also saw that there was a lot of support around the 212 to the 213 area on the IWM. So usually when we do fall outside of the lower level of the B-band, we have a much more abrupt vomit to the downside the next days coming. All right, so that happened that happened back in July 7th. That happened right here on July 16th, and this entire week here that happened on May 11th and May 12th, right? So and it definitely happened on March 4th, but March 4th I wasn't making videos, right? But we documented every single other occurrence that this happened. I said that I would be buying into calls for the same exact reason. And this reason was no different, literally. So we saw that the IWM was outside of the lower level of the V-band. It still had room to go to the downside. And I saw that there was support around 212, 213, which is where I said that I would buy into these calls much more heavier. 225, September 3rd calls, all right? And that's exactly what happened. We ended up falling much, much lower on August 19th. The price actually went and dipped below 211 to 210.68. So I bought into some calls along this trend line right here. You can see that we were hugging this trend line. Let me go ahead and make it a little darker. Okay. That trend line right here, you can see that we were hugging it. And I was like, all right, I'm going to buy some. If we fall to that level, I'm going to buy some. And that was essentially the 212, 213 area, right? It's really that simple. We saw that we were outside of the lower level of the B-band. There was downward momentum. The IWM shows a history of, the first sign of it falling, there's a bit of a bounce, but there's usually a much larger vomit right afterward. So that's exactly what happened. And I mean, if you would have bought into those calls down here at 212, we're trading at 219 now. So those were up, hundreds of percent. So days like this, right? So if you're in a trading group, right? Days like here, when we are at extremes, those are the days when a lot of people begin to, all right, hey, I'm growing a $1,000 account to $5,000. I'm growing a $1,000 account to $10,000. Because we are at such an extreme that the likelihood of the market continuing in that same direction is very, very low. So the likelihood of their trades, so say for example, I want to start a $1,000 to $10,000, challenge. Putting my entire $1,000 into calls right down here is a very high probability trade. Which is why, hey, 2 days later, boom, I turned 1,000 into 7,000. And, yeah, that's just a little secret. But, yeah, that is essentially why I traded the IWM that way. That was my intuition behind why, to go long at that position. And this wasn't just some random, I'm going to buy some more if we fall lower. No, I saw that there was a trend line that we were following. Yeah, that's really truly it. All right, so there was that trade. Now we can go ahead and talk a bit more in detail about the SPY, the QQQ, and what can potentially still happen for the IWM. All right, so here's the chart of the SPY. All right, very plainly, we can see, instead of, talking about the analysis on the SPY that we missed out on, right now, the SPY is at basically the trend line that it broke out from and signaled the downward move. We're back retesting the trend line to the downside, and we have to see if we can reclaim that trend line. Things to take into consideration right now is that the MACD on the SPY is working up, currently oversold, and we made new all-time highs today. So if you've been watching my videos, you know that that is very, very strong. Another very, very, very strong sign is that the RSI, you can see that the RSI is lower than it was back here on August 16th, right? So the RSI is currently lower than it was on August 16th, but the price of the SPY was higher. You understand? So, the price of the SPY was lower. So the RSI is higher at a point when the SPY was trading lower. So that means that there is much more room to the upside to go potentially on the SPY. Okay, because today we made new all-time highs, and the RSI is still not even where we were before. I hope that made sense, okay? So the fact that there is that discrepancy is very, very bullish for the SPY, especially in the short term. We just need to see how we will respond along this trend line here. So the level of resistance that needs to break for tomorrow is 449.02. So 449 essentially is going to be that level of resistance for tomorrow. If we can break that, then we will be reclaiming this trend line. And by then, the MACD will have crossed over as well. And then we just need to see how the other indices are, okay? So there's the analysis on the SPY. The NASDAQ, I mean, same concept. You see that it was trading outside of the lower level of the B band. Very, very overbought or oversold condition here. The MACD was extremely oversold. The RSI fell sharply as well. And now the NASDAQ is also retesting this trend line that was an uptrend since May 21st. So we were following this very strict, huge uptrend here on the NASDAQ. And, as soon as we closed below it, I signaled that I was going short. And, we shorted it all the way down to 352. Remember? Yeah, you can go ahead and look at the past videos of back when this was happening. So there was another uptrend line that I was also monitoring. And I connected that from the May 19th bottom and connected it to the July 19th as well and just extended it. So now we are back at that level and we are retesting it perfectly today. So tomorrow, the level of resistance for tomorrow is going to be approximately 374.80. Okay? So if 374.80 can be reclaimed, then that's a good possibility that, this same level on the SPY will also be reclaimed. So there's a correlation in the price action for these indices, right? And you can see that clearly the NASDAQ broke new all-time highs. And today it was like, it led the SPY. Whereas the SPY couldn't really break into new all-time highs with the same vigor that the NASDAQ did, right? So now you can see that the NASDAQ actually crossed above the MACD already, and it can still have another 1 or 2 bullish days before it falls back down to approximately the 370 area, right? Whereas the SPY, it's still oversold. It hasn't crossed above yet, right? And you can see the NASDAQ, it did cross above. Okay. So that is the only worry in regards to a continued upside. The fact that, the NASDAQ is at resistance, it crossed above. We just need to now see how it responds at this level, at this trend line here. If it can cross above that trend line and then, create support above it, start consolidating and then, trade above it consistently, that's a whole different story. So yeah, I mean, we just need to monitor what's going on here. But the one thing that I was looking at, especially during this entire, you know, the whole debacle with, you know, Afghanistan and all the bad news that was coming out recently, 30-year yield was super bullish this entire time. So regardless of what was going on in the equities, the 30-year yield was very, very bullish this entire time. Regardless, it fell, that's fine, but it rebounded. And it was rebounding and it was staying up on days where the Nasdaq and the rest of the market was falling. So this was another very, very nice indication of the strength of the overall market. Okay. And like I said before, the 30-year yield, right? The 30-year bond. When the 30-year yield and the dollar are both bullish, then the Nasdaq is bullish. All right. And that's really what we saw here. We can go to the dollar. Sorry. You can see the dollar was also bullish. All right. It just had bearish days today, but all throughout the scare for you know, Afghanistan and like the falling of the equity prices during the 16th to the 19th, the dollar and the 30-year yield were both very, very bullish. But the overall equity markets, they had a bit of a sell-off. That was the perfect time to go long. And that is exactly why I said I would be buying much heavier down here. So all of these things are connected. And I hope you guys are starting to really look at why I look at many different things and analyze these things the way that I do. It's not just a matter of, oh, you know, if I talk about this, then I could talk about that, and I could talk about this. My YouTube video will be longer, and more people will watch it, this, that. It's not for that at all. It's because these things that I'm actually watching influence the market. And after a while, there's just a pattern to them. As you can understand and see the pattern over and over again, then it becomes a matter of risk management and just controlling your portfolio. And yeah, that's really it. Things really worked out in the swing section. Those are the different reasons why I was looking at those things. The 30-year yield, super bullish still trading above the trend line. The dollar obviously had a fall today. That's fine. We'll go into more detail about that tomorrow. But for the rest of this video, now I guess we can go ahead and talk about what is next for the IWM. So the IWM down here at 212, it's up 3.6% compared to the Nasdaq, which had a huge move today. Up currently 3.67%, and the SPY up. You know, the SPY is obviously underperforming compared to the IWM and the Nasdaq. So the IWM had a huge day yesterday and into today's open, and the Nasdaq basically caught up and is now trading at that level of resistance. But what's interesting to note is that the IWM reclaimed this trend line here. And today, that level of resistance that it reclaimed was 218.88. You can see that that level here. So tomorrow, the level that it needs to remain above is going to be that same trend line at approximately 219. All right. So if 219 can still remain as support for tomorrow for the IWM, that would mean that we can continue on higher. You can see that it's still not over. So you can see that it's still over sold on the MACD, which means that there is still much more room to go to the upside. The RSI is still nowhere, you know, near overbought. And we just reclaimed above key levels of resistance. So those are very bullish signals for the IWM. And that's why I said, you know, 225 calls, because those were going to be super cheap. And down here at 212, I don't even want to talk about the price and everything, because I didn't call it out. I didn't actually say, hey, you know, right now I'm buying into these calls. I just gave the price range of when I would buy the calls. So I'm not really going to consider it a W. But, you know, everyone that took the trade and bought the dip for those reasons, I'm not just randomly giving arbitrary price signals. I'm doing that because I saw the strength in the 30-year yield. I saw the strength in the dollar. I saw the oversold conditions that were met on the SPY. on the Nasdaq and especially on the IWM. So I saw that, and that's why I was like, okay, we're gonna go into IWM calls because it is the most overextended to the downside, and it will give the best return to the upside because the markets are like rubber bands. Markets, shift in momentum, and it's really like rubber bands. When you have a very huge move to the downside, usually what happens is there's a sharp move to the upside right afterward. Oh, I can't draw it. Right afterward, right? So that's usually what happens, and that was also the thing that we've been monitoring the past few months on the IWM specifically. So, it's just, let's just do it. And that's basically what happened. All right. So there's my analysis on the overall stock market. And that should be it for today. Tomorrow's video, I'll go back to normal. I'll start talking about the overall crypto markets and, everything else as well. All right. So I hope you guys enjoyed the video. Please, just try to understand what I'm explaining and what the correlation between different indices are and why they matter to other indices and overall stock market. All right. So yeah, I hope I helped. And without further ado, I will see you guys tomorrow. Thank you.